The pace at which fiscal stimulus is being injected into the US economy is just unprecedented. We remain extremely confident around, the medium-term fundamentals in the gold price. Royalty companies give you all of the leverage that a mining company gives you and all of the upside linked to price, exploration success, production expansion, without any of the drag from an operating cost or capital cost perspective.
Vox Royalty Corp is a supporting partner of Liberty and Finance. Here we have a deep dive with their Chief Investment Officer into what makes royalty companies different. Welcome back to Liberty and Finance. We have a first-time guest today. He's from a company that we've met before. Vox Royalty is the company, but this is Spencer Cole. He's the Chief Investment Officer of Vox Royalty Corp, and he joins us this Wednesday, June 30th, 2021. Spencer, thanks for joining us on Liberty and Finance.
Thanks for having me on, Dunigan.
We've spoken with your CEO, Kyle Floyd, on a couple of occasions in the past, and he's helped us to understand some implications of the macro environment that we find ourselves in economically and financially. He's talked to us about the commodity super cycle. He's talked to us about this burgeoning interest in a secular bull market that's been created around precious metals. And specifically, he's also talked to us about some of the unique aspects of Vox Royalty Corp and royalty companies in general. Today, with you as the Chief Investment Officer, we wanted to plunge in deeper into why royalty companies. I know we've spoken with one of our main guests that we have on quite often is Rick Rule from formerly Sprott Asset Management. He talks a lot about why people should consider royalty companies. But we wanted to talk about, again, just hitting at the high points, what's going on in the overall environment with which we find ourselves. And if you could maybe give us what's top of mind, one or two factors that occur to you that are very significant right now, that may be different from ordinary times, that people should be aware of, that set the context for why what we see happening is unusual in both the commodities, natural resources, and macro financial environment.
Sure, Dunigan. I guess I'll break it down into two key buckets. The first is around monetary policy, US monetary policy and inflation. And then the second is more around, I guess, what we're seeing and hearing in Asia, particularly as it relates to more industrial commodities, which we have some exposure to as Vox. In the first bucket, all of your listeners would be well aware, what's happening with all the excessive amounts of US dollars being printed. I think from a personal level, booking flights just domestically within the United States. My in-laws are all based in Southern California, and it was certainly a lot cheaper to be flying down there from Toronto 12 months ago than it is today. The pace at which fiscal stimulus is being injected into the US economy is just unprecedented, as your listeners would be aware. And so when we look at the gold price and certainly it's had some blips recently, and there's been some preference towards crypto, but we remain extremely confident around the medium-term fundamentals in the gold price and the implications that has for all of our gold royalty revenue. From an industrial commodity perspective, we routinely interact with commodity traders and downstream users of industrial commodities, particularly in Asia. Just last week, I was speaking with a major iron ore trader based out of Singapore, and he was sharing with me just how exceptional the demand is for iron ore out of China and Chinese steel mills. So, there's been supply shortages coming out of Brazil. West African iron ore mines just are still struggling to be built. So we're seeing unprecedented prices in industrial linked commodities such as copper and iron ore. And Vox shareholders benefit from that because, beyond just our gold royalties, we also have a really interesting mix of industrial linked commodity royalties. So the record prices in copper and iron ore are really sort of giving us the wind at the back in terms of our royalty revenues at the moment.
It's interesting because a lot of our viewers are keenly interested in monetary metals, gold, silver, even platinum, palladium, because of wanting to protect their families and their futures from debasement that's happening to our fiat currency system. So as they've been watching with some holding their breath for a decade or more for new nominal highs, for example, in silver, which haven't happened yet. People are wondering, well, when is that going to break free? When is it going to finally see fair value, that sort of thing? But meanwhile, the copper and other industrial commodity metals, base metals, have been setting new highs. So it's interesting to note that they can benefit from both in this way and not have to necessarily wait only for the monetary metals to break out to start benefiting from that. You mentioned in passing the gold price you see stabilizing and having a strong support underneath it from these levels. That's a specific question I wanted to drill into about royalty companies and their exposure to such things as the gold price in order to make a profitable business case. I just wanted to mention again that Rick Rule from formerly Sprott Asset Management, now Rule Investment Media, has educated us on why investors, especially ones who may not have considered royalty companies before, should really take a hard look especially if they're getting started. They already have some savings in cash and bullion, and now they want to start dipping their toe into investing. Why they should seriously consider royalty companies as a good first step when getting into, rather than just picking a mining company, a specific mining company. And one of the takeaways that I've gotten from talking with Kyle Floyd, your CEO, or from other royalty companies, is that a royalty company already has this department of experts who are doing that diligence and doing that scrutiny and trying to pick really good mining companies whose operations they believe will be profitable so that they can take a stream of profit off of that. And could you explain more to our viewers about why royalty companies are an especially fruitful and reasonable choice for especially new investors, but for any investor wanting to participate in mining without necessarily having to go pick individual mining companies themselves?
Absolutely, Dunnigan. So royalty companies over the past 20 years have outperformed any commodity-linked benchmark, whether that's any commodity-weighted equity index, the physical metals themselves, or certainly the underlying mining companies as well. So not to say that back-tested performance is an indication of the future, but had you invested in royalty companies over the past 20 years, you would have made spectacular returns. In terms of why that outperformance has occurred, royalty companies give you all of the leverage that a mining company gives you, and all of the upside linked to price, exploration success, production expansion, without any of the drag from an operating cost or capital cost perspective. So the great things about a mining company are you get huge leverage when there's exploration success. But the downside of a conventional mining company is it might take that company 5 to 10 years to bring that mine into production. And you as the equity holder in those shares, you're going to be significantly diluted by the time the mine comes into production. You get none of that dilution and none of that cash drag as a royalty investor. So we like to say our first investment in and our first cash into a royalty investment is our last. So when we buy a 1% revenue royalty or a 2% revenue royalty, we essentially get all of that upside linked to commodity price, exploration success, without having to pay a single additional dollar. We're in the fortunate position, Dunnigan, where we can just sit back and wait for those mines to come into production and just collect the checks for our investors. So it really is the superior way to get commodity-linked exposure.
One thing, again, from a standpoint of our viewers who tend to be risk averse, is diversification in a meaningful way. I just find myself mystified how we've been bamboozled, I think, so much as a population to think that, by just spreading out across multiple either stocks or stocks, bonds, and different types of things, that even if people think that they're getting diversification that way, they may be getting diversification because some of those things may not perform as well. But how is it that, like with a royalty company, you get built-in diversification, whether it's by asset type, whether it's by mineral type, whether it's by geographic location? Can you explain how that just comes along as part of the structure of the thing?
Absolutely, Dunnigan. So if I take our royalty portfolio by way of example, we have 51 royalties scattered around the globe. So just in terms of individual asset diversity, if one mine, God forbid, collapsed or it wasn't successful, our investors still have 50 other separate mines that they have direct exposure to. So there's huge asset diversification there. From a country risk perspective, we allocate capital across a broad suite of countries. We're in about 10 different countries at the moment. So, if one government decided to change their taxation policy, we've got the diversification across, a broad geographic split of different jurisdictions. And then also from an operator or corporate perspective, we've got about 45, 46 separate mining companies that are operating our mining properties. And if you took the combined value of those operators, it's in excess of $50 billion of combined, market capitalization. So investors in a royalty company like Vox get the benefit that even if one of our operating partners had some sort of operating or financial hardship or challenges, you've got the benefit of 45 other mining companies that are actively progressing our royalty properties. So it is the best way to diversify portfolio risk in the mining industry. And just on the geographic diversification, we've specifically constructed our royalty portfolio with very low risk in mind. So 80% of our royalties are located in Australia, Canada, and the United States, which, we see those three countries as three of the safest operating jurisdictions from a mining perspective.
You mentioned another thing about Multimineral. Can you talk to us about that kind of diversification?
Absolutely. So Vox is a precious metals weighted royalty company. So about 70% of our capital is allocated to predominantly gold royalties, but some silver and also some platinum group metals as well. But outside of that 70% weighting to precious metals, we have a really interesting mix where the balance of the 30% of our portfolio is spread and diversified across industrial metals, such as base metals like copper and nickel, that have really strong upside from a electrification perspective. And then also we have some more construction-linked and emerging market-linked commodities such as iron ore, which, as I mentioned before, with China's insatiable consumption of industrial-linked commodities, we're seeing record prices in some of those commodities. So investors get the benefit of not only a really strong weighting towards gold and silver prices with Vox, but also this fantastic array of industrial-linked commodities that are really charging hard at the moment.
I wanted to circle back with a topic that's near and dear to the heart of all of our viewers, and that we alluded to at the beginning, which was the gold price, the silver price, that sort of thing. A lot of our viewers and subscribers are also stackers. They've been stacking precious metals for some time. They're keenly interested in sound money, real things that have no counterparty risk, things that they can count on being there in the future, regardless of what crazy hijinks our powers that be do to our fiat currencies and interest rates and everything else. Okay, so here's the question. A lot of our individual fortunes and futures we feel are tied to metals prices, for example, or how metals are the relative scarcity, availability, how well they're being valued in the marketplace. How sensitive are royalty and streaming companies to the valuation that's being assigned to metals in the marketplace? So the gold price, for example, if the gold price stays at roughly where it's at right now, mid to high 1700s for a while, how successful and profitable would a royalty company be versus if the metal, how sensitive are you to either slight declines or potentially increases in metals prices?
Yeah, no, that's a great question, Dunnigan. So I think royalty companies such as Vox, we are exposed to commodity price fluctuations, given the majority of our royalties are top line revenue linked percentage based royalties. So as commodity prices go up, we obviously benefit in that upside, and likewise as they go down, we have some contraction in terms of our revenues. Importantly for us, because our royalties are essentially pure yield. We're not paying any operating costs. We don't have to pay for the labor costs of the mine. So, our margins, our operating margins are extremely high. in the range of 80 to 95%. So, when we see contraction in commodity prices by say 5 or 10 or even 20%, sure, the top line revenue contracts for that mine, and so too do our royalty revenues, but we've got so much leverage and so much margin in our royalty streams that we're really insulated from that price contraction. The other point I would note is that, because our royalties are essentially perpetual for the life of the ore body, and we have so many new royalties that are coming online, so many new mines that are being built within our portfolio. Even if we do see a 10% contraction in, say, the gold price, we have other royalties that are just about to start paying. So investors in Vox can be confident that, as our number of producing royalty assets goes from 4 to 7 to north of 12, you've got new streams of royalty revenue that are coming online that will more than offset any potential downside in the actual commodity price itself.
You mentioned a word in the middle of that discussion that caught my ear, and that was perpetual. Now, every mine is a depleted asset. We know that there isn't like there's this magical thing where you just keep digging forever and it just keeps coming out forever. But for as long as that operation lasts, it isn't like 5 years or 10 years or something. It's as long as that operation is still pulling metal out of that asset, you continue to receive the benefits of the stream of income off of that.
Yeah, that's it's an important nuance for listeners to understand. So our royalties sit with the actual underlying mining claims themselves. So for the life of those claims, which is typically in a matter of multiple decades, our royalty stays in place as a sort of senior secured mortgage over those claims. So what I would say is, in terms of the mine life and the perpetual nature of royalties, a lot of the ore bodies that we're investing in by way of royalties, they've got the benefit of significant exploration upside. So if I take one example, one of the most famous royalties in our industry, which is the Gold Strike royalty that Franco-Nevada owns, they purchased that royalty in 1986 for $2 million. At that time, that mine had approximately 600,000 ounces in the ground of reserves. Fast forward to today, you're looking at 35 years onwards, and that mine now has more than 20 million ounces of reserves in the ground. So not only have they mined, literally tens of millions of ounces of gold from that mine, they've now got, a multiple left in the ground that they'll continue to mine. So that initial royalty investment for $2 million has already yielded over $1 billion in revenue for the royalty holder, and the future royalty is still worth another $1 billion. So those are the types of investments, and ideally the types of returns that we're chasing for our investors, is a $2 million upfront investment to unlock literally billions of future royalty revenues.
Okay, so this sounds like an extremely high potential business model. How successful has what differentiates, let me ask it this way, what differentiates royalty companies that really hit the ball out of the park versus those that just kind of bump along? What elements should investors pay attention to when trying to identify a very promising royalty company in which to invest?
Sure, absolutely. So I think one key thing that investors in royalty companies should focus on is the team. Is this team, technically well informed? Are they mining engineers and geologists? So, for example, with Vox, we've got 2 mining engineers and 2 geologists in our management team of 6 people. So, every time we review a mine or a new discovery, it's through the lens of very deeply technically informed allocators of capital. So, investors are essentially getting an investment team in Vox where we don't fall in love with the wrong discoveries or the wrong ore bodies. We as management, we own 15% of Vox ourselves. So, every time we make a new investment, it's as investors ourselves. So, some royalty companies don't have the same depth of technical expertise that we have at Vox. We're very fortunate to have 2 mining engineers and 2 geologists, but that's an absolutely critical point for royalty investors is, does this team truly understand what's in the ground and how it will potentially be mined? Another key feature that I think investors in royalty companies should focus on is, like any business, what is the differentiated competitive advantage that this company has? So, for example, we as Vox have what we believe is the world's largest proprietary royalty database that we've built over the last 10 years, which by the end of this year, it should have over 8,000 individual mining royalties in it. And so we use that intellectual property and that sort of big data to identify hidden pockets of value and forgotten royalties, often sitting in the hands of very strange counterparties, to acquire them for deep value that will have value for shareholders today and as they start generating revenue going forward. So a few examples of that is, we bought a gold royalty from a hearing aid company. We bought an iron ore royalty from a telecommunications company. We bought another gold royalty from an automotive parts company. So, these are all weird and wonderful holders of royalties, but, that sort of represents some of the competitive advantage that we as Vox have to continue outperforming our competition. So those two key elements, I think, would be things that I would recommend royalty investors to watch out for: a highly technical team and a differentiated business model with a true competitive advantage.
The team part is something that you just reminded me about, and that's something, again, Rick Rule, who has interviewed on our channel numerous times, his role as an analyst scrutinizing the natural resources space is that he said there's, like, of all the potential companies out there, like a pile of hay or wheat, there's only a small percentage where the value is to be found. So it's that value of scrutinizing, analyzing, assessing, doing the due diligence that can be overwhelming to an ordinary investor. I mean, most of us are trained. We have a regular thing that we are good at. That's not the thing we're good at, is doing that. And so a lot of people get, shabby results from their investing because they just pick whatever companies they heard about, in the last week, or just trying to cover some different ones. But in this case, that team that you mentioned that's already doing the scrutiny and doing the selection and doing the diligence to select, basically to curate this collection of potentially promising investments, some of which sound like already producing and some which are expected to in the future. How has that attracted attention from major investors? Can you talk to us, without divulging anything that you shouldn't, about whether there's any ETFs or other major institutional investors who have shown interest in Vox particularly?
Sure. So our last financing was completed at the end of Q1 of this year. And during that roadshow process, we had very strong institutional demand. Some of the who's who of major gold and precious metal investment funds, both in Europe and North America, participated in that raising. Some of them are a little bit cagey about being named, but I can tell you the overwhelming majority of that circa $17 million raising was taken up by very large, sophisticated, predominantly precious metal investment funds. So, but I think beyond that, we continue to have really encouraging conversations with new funds who can see the true differentiated value of our business model, and they can see the inherent value of our 51 royalties, and they can see the fact that very few royalty companies in the industry offer the same organic exponential growth that we currently offer investors. One of the criticisms when we went public last year was, hey, Vox, you've only got one producing asset. I can't really get too excited by that. But we told investors we're targeting royalties that are between 3 months and 18 months, typically, away from first production. So, from going public with one producing asset, we now have 4 producing assets. We expect to finish the year, the end of the year, with 7 producing assets. And then we have a clear path to 12 and beyond 12 producing assets, just organically what's in our portfolio. So going back to your question about institutional interest, when we present that organic embedded growth that we have within our portfolio of 51 royalties, when we present the technical team that we have, the world's largest royalty database, all these things stack up for our institutional investors. And, we've never had more interest from institutional investors than we have today.
This is something I had never heard of before this past year about royalty and streaming companies. It's not something I think that's a common knowledge. I think if you walk up to the average person on the street and you say, names some major ways that you could invest specifically in precious metals or natural resources, I don't think most people even have that in their vocabulary to say royalty companies. They think royalties is something that recording artists earn for singing a really good song or something like that. And this is analogous because you're basically deriving a stream of income off of someone else's work. Playing the devil's advocate, what's in it for the underlying? Why would anybody sell if this is so profitable? To sell royalties, what I'm trying to say is, if it's profitable for royalty companies to buy these royalties so that they can benefit from them, why? What's the benefit in it for your counterparty in that transaction from whom you buy these royalties?
Sure. So the majority of the counterparties that we acquire royalties from, Dunnigan, are either prospectors or explorers themselves who often historically made the discovery, but then they sold out of the discovery because they didn't have $200-300 million to build the mine. And, for a lot of the folks that we acquire royalties from, for a lot of them, it's the largest single asset they hold in terms of their personal wealth. So, for example, earlier this month, we did a deal with a family of ranchers in Nevada who over a really exciting gold royalty on the South Railroad project that Gold Standard Ventures is developing. That family had owned the ranch that those gold deposits are on, for decades. And we were dealing with, the children of the original ranchers and the grandchildren of those ranchers. But, when we approached them to potentially acquire their royalty, it was clear that there was broader estate planning going on. So, they said, we don't necessarily have 3 or 4 years to wait until this mine starts producing. We want to take some money off the table today, and we want to rebalance our portfolio. And when so much of your wealth is tied up in one specific asset and one specific outcome, just a lot of folks just don't want to rebalance their affairs. And so we, as a royalty company, we come along, we make them a fair offer, we're transparent about how we evaluated their property and their royalty. And, if we can reach a deal, fantastic. And if we can help them rebalance their personal wealth, fantastic. If not, no harm done, and we'll move on to the next deal.
This is interesting because I always look for in life things that are truly a win-win all around. And the light bulb, you just helped me. The light bulb just went on for me. Back to that spirit of diversification. Here we have, myself and our viewers are sitting here trying to figure out how we can diversify our natural resources or precious metals investments. And one way to do that is by buying a well-chosen royalty company. We get access to a whole portfolio of potential and promising assets. So that's a form of diversification that's already had some scrutiny. I'm now looking at it from what you just described from the other side of this, and this is the rancher who's sitting on a gold mine and thinking, all of my life is all concentrated in this one asset, and that they're not diversified. So if they want to diversify, one way they can do that is by selling an interest in or a fractional interest in that underlying asset for immediate cash that then they can diversify into other things. And also from a preparedness standpoint, our channel used to be called Reluctant Preppers, and it was about preparedness in general. And so they may want to make some other preparedness steps depending on what outcome they see playing out in our macro environment going forward, and that cash that you provide them could help. So really, light bulb went on from you there, how everybody can win through this.
Oh, I was just going to say another one of our royalty sellers, he contacted us and he said, my daughter's about to go to college, and I need to unlock some cash because I don't want to go into a huge amount of debt so that she can go to college. And so we were able to structure a deal with him and to buy his royalty, and he was thrilled about the outcome. And now his daughter's going to college without the fear of having a mountain of debt behind her, when she graduates. So that's another win that we're able to unlock with one of our royalty counterparties.
All right, so we've been talking about the macro environment, we've been talking about precious metals, we've been talking about royalty companies in general, that whole business model, what makes it profitable. So what is there specifically, what's the one or two things specifically about Vox Royalty that you think people should really scrutinize because it's worthy of further investigation on their part because of something that differentiates Vox?
Sure. So I think listeners are hearing about Vox at an extremely opportune time. Research analysts at three large broking houses have put out consensus forecasts that see Vox's revenue, top line revenue, increasing exponentially over the next 2 years, and that revenue ramp, is expected to hit literally in the next few quarters. So I would say to prospective investors, if you're looking for a ground floor opportunity, $90 million company that is poised to potentially re-rate on the back of material revenue growth, you're catching Vox Royalty at a fantastic time. The other point I would make is the business that we've built over the last 10 years is truly differentiated. We've built the world's largest proprietary royalty database. We're a team of mining engineers and geologists ourselves, so that owns 15% of the company ourselves. I've got 4 of my siblings that own Vox stock, and so we've got a lot of noisy family shareholders that we're working hard to make money for. So I'd say this business has been built by investors for investors to get superior risk-adjusted returns to commodities. And that's basically Vox in a nutshell. I think it's a great time to invest, and I really appreciate the opportunity to speak with you and your investors today.
Certainly. And for people who specifically want to find out more, where should they go?
Go to our website, voxroyalty.com, or contact us through the website. We're more than happy to have a call with any investors, with any member of our management team.
Excellent. Well, we've been very grateful for your presence here. Spencer Cole, the Chief Investment Officer for Vox Royalty Corp. Thanks for joining us this first time on Liberty in Finance.
Thanks so much for your time, Daligan.